Give me a thumbs up, please. Great. Hello, 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 hello. Welcome. We got a new face. We got another new face. Welcome, guys. Welcome to our regular meeting explaining to people how to participate in the crypto markets and the broader markets in the world in this new paradigm. Today we're going to focus on how to enter the markets. It's such a complex topic that we're going to do a 2-hour meeting here and then a 2-hour meeting in Ubud that's going to be a slightly different representation, spoken in the language of Ubud, explaining how to enter the markets. Now, before we go into all the details of all the signals and the biggest signal is right in front of you right now. So can we turn the camera around? When this room is this empty, that's when you enter the market. This is seriously a rule. Seriously a rule. When this room gets so filled that we don't have seats, you sell. When this room is dead and empty and there's literally nobody in the room, I'm not even in the room, that's when you buy. Okay? Because what you want is you want people to be completely disinterested in the space. You want them to be terrified. You want them to run from it. You want them to have trauma. I mean, we don't want anybody to have traumas, but you want them to be like crying about their traumas, about how low their portfolios are, that they don't even want to go to meetings and talk about it because it reminds them of being 80, 90% down. That's when you enter the market. That's when smart money comes in. Yeah, literally. This is the best signal ever. We will take a picture of this and post it every time, and then that's the only signal you need. And then on the other side, when grandma comes in and goes, "Hey, Sonny, I heard about the Bitcoins. I think we should all sell the house and get the Bitcoins." At that point, you go, "Grandma, don't sell the house, but I'm selling all my Bitcoins." Okay? This is also, it's fantastic. Thank you for not showing up. We really appreciate you because you're all telling me things. I pay a lot of money to have these signals, but these signals are free for me. So it's a beautiful thing. Especially when it's like how to enter the markets. You know, the thing you've been asking the whole time. You're like, how do we enter the markets? Which coins? Guess what? I'm going to give you the coins today. I'm going to do the one thing I never do, and I'm going to give you a list of coins that I think are great entries that are going to be great. Guess how many people are going to see it? 7, 8, 9, 10, 11, 12. So 12 people are going to make money out of the 1,000 people that are in the community? If you're watching this, you're one of the few people who watches this market at the time when you should be watching this market. Okay? This is such a cardinal, seminal rule that the way this market moves is there are times when everybody is exuberant about it. Everybody looks like they're making money. Looks like they're making money on a screen. They don't actually make the money. That's the time, as soon as the world comes, you hand it to them and go, "Here you go. Would you like Bitcoin at 40,000, 50,000, 60,000, 70,000? Enjoy it. I'll sell it to you from 40 to 70. I'll wait until it goes to 15 and you cry and I will buy it off of you for 15. That's the entire game, right? So where I want to start is patience. Patience. It sounds like, oh, patient. Of course, man, I know patience. No, you don't know patience. Like, you know, when you need to enter the crypto markets, many of us have been patiently waiting since October. We exited, sat on the sidelines, the markets went up, everybody looked like they were getting rich. Nobody got rich. They came back to being poorer than the way they entered because they bought between $50,000 and $70,000 Bitcoin because we were all supposed to go to the moon. And then you just sit and you wait. What I did is I went on vacation, went to Montenegro, going to India, just going and living real life, right? Building businesses, building revenue streams, doing other stuff that's not crypto, because crypto is just like a little piece of wealth. Businesses and cash flow generating assets are the real name of the game. So from October until now, we set up 7 revenue streams. And the 8th one's going live now. We're going to announce it next week. While everybody was crying, we built cash flow, and guess what we have now? Cash flow. And when the market's down, we're getting cash flow. Guess what we're doing with the cash flow? We're buying it all up at pennies on the dollar. So the patience, first of all, of not entering the market is huge. The patience of just sitting there on your cash. People like, dollar's going to go to 0. Oh, actually, dollar crushed the euro, crushed the yen, crushed every single currency, crushed Bitcoin and gold and bonds and real estate. Dollar has just been on a fucking murdering spree and just murdering every single asset class. The single greatest asset you could sit in since October was the dollar, okay? And you could have gotten into the dollar and just sat, and you would have literally been able to buy more stuff in Europe. I just went and bought like things that are 50% off because the European prices are still in euros. But my point is the patience to not do anything, right? Because the biggest risk, actually the only person who's capable of losing all your money, who literally the only person who has the logins to lose all of your money is you. So that means the biggest risk to your portfolio is you, right? And we've looked at the psychology and stuff. Please go back and watch the previous recordings. We looked at the psychology. Okay, so the psychology is all you. So if you just remove yourself from the process as much as possible, you're reducing the risk of you losing all your money, right? And the way you remove yourself from the process is just sit and wait. The moment you feel the FOMO of like now, you know, I was in the woods for a week and people like, the market's moving. And I was like, I don't care, I'm in the woods. Okay, I'm living real life. The markets, that's what markets do, they move. Okay, they're like, is it leaving without us? Should we jump on? No, if you get that feeling, it's not the time to enter. The feeling you should get is like depression. Can you pull up the Wall Street cheat sheet? You should feel depression. You should feel horrible. You should feel disgusted with the space. You should feel terrified. You should be convinced that it's only going to keep going down to zero. You and everybody around you. And that's the moment nobody wants to touch it. It's not going to be, oh, the market's moving, look, it's going up. This is the funny part. Like, we have a bunch of toddlers on YouTube who just learned how to draw lines. They're like, look, there's a support resistance level here. If it goes above the support resistance level, this is where I put the order to enter the market. And like, that's child's play. We have sentient AI trading against you that knows exactly what line you're going to draw. It doesn't draw lines, it draws Fibonacci circles around you, and it knows how to like manipulate your psychology and trade against you. So like, waiting for a line to get hit to make an entry is one of the dumbest things that's happening in this space today, okay? So, patience. Right now, don't do anything. Chill, just wait. Because when the time comes to enter, it stays for a long period of time. Because who's doing this? Who is doing this to the market? Smart money, rich people, billionaires, hedge funds, countries. You know how much money they have? Hundreds of trillions of dollars. They have 1,800 billion dollars. 1,008. Yeah, 1.8 quadrillion dollars.
1,800 billion.
No, 1,800 billion dollars. 1,800 times. It's quadrillion, 1.8 quadrillion. I don't know. You guys figure it out. They have a fuck ton of money. Okay? So when they need to put the money into the market, they can't just go, boop, here's 100 billion or $1 trillion put into the market. They need to bring it down to a certain range. And in that range, it'll just kind of do this for a long period of time. And that is them loading up. That's us scared and selling, and that's them buying. And they will slowly put their hundreds of billions of dollars at the bottom of the market. That gives you a very long period of time to actually enter. So you shouldn't be feeling FOMO of wanting to enter. You know, the patience of letting all that develop is great. Now, if you guys haven't been here before, the way we speak about money and everything is liquidity. It's called liquidity for a reason. It's water. It moves. If it sits in one place, it becomes stale and it becomes stagnant. But it moves, it simply moves between different asset classes, right? So, like we've described before, the real, all right, so what you should feel is anger, depression, horrendousness. You should need a therapist. You should have healers. That's when you want to enter, when people are just depressed. And this is called the Wall Street cheat sheet. This is what Wall Street uses to take all of our money. This is taught to beginners. If you haven't seen this before, this is how you need to live. So we want to enter in this range. Like, trying to call the bottom is stupid. We don't care. We just want to enter in this range, and we want to get out in this range. not here. That's another fool's errand, trying to always get out here. Plus, it's like, you won't realize that this is here until this happens. When this happens, nobody wants to buy it. And you're going to try to sell things when nobody wants to buy it. Good luck, right? But the point is, exit here. Ideally, exit between here and here, and enter between here and whatever here. And look at this range. This is months and months and months and months of time for us to enter, okay? But just speaking about liquidity, the way liquidity moves is it moves between asset classes. The vast majority of liquidity, believe it or not, is sitting in a casino called derivatives. More money than all the money combined in the world. All the money, all the gold, all the real estate, all the cars, all the everything, all the things we own, stocks, everything, bonds, everything's on this side. They have more money sitting in a casino called derivatives, okay? But let's ignore the derivatives because they're like fake financial products anyway. Let's just focus on the real assets. Bonds, real estate, stocks, commodities, crypto, and cash, if you want to call that an asset. The money just moves between them. But the most amount of value, true value, is sitting in the bond markets. The bond markets are debt from sovereign nations and companies. Okay, but that's the real ocean. Debt is everything. Debt is money. Debt is the whole name of the game. The stock market is just a derivative of the bond markets. The stock market is simply a representation of what's going on in the bond market. If you adjust something in the bond market, it fucks up the stock market, or you turn it the other way and it pumps up the stock market. That's simply because liquidity flows from debt to companies that add real world value. Crypto is just a new tech stock. You know, there's stock markets, then we have the NASDAQ, which is like the tech sector. Crypto is just a new set of tech stocks, the whole thing. And then Bitcoin is one tech stock inside, and the crypto you're holding is like nothing. So the way we always talk about it is the ocean is the bond market is the ocean that's connected to the sea called stock market, that's connected to a little puddle on the beach called crypto. And inside of that puddle, you probably have like a glass of water liquidity that's called Bitcoin. And what that glass of liquidity does defines what your like molecule of crypto does. And you're sitting there just watching and drawing lines on like the puddle. You're like, if the puddle goes past this line, I'm going to put more liquidity into the puddle. And it's like, yeah, but bro, did you see what the sea is doing? Because your puddle isn't going to do shit if the sea is drying out. And it's like, but no, look at the ocean. Like, the ocean has like a comet just dropped in the ocean. I don't think your lines on your puddle are going to make much sense unless you look at the ocean, okay? So that's why we look at the biggest pictures. When you look at that, what happened from October until now? Central banks pulled back the liquidity from debt markets. That's all they did. They raised interest rates. They reduced the amount of money that they're printing and pumping into the debt markets, okay? And then what did that do? That pulled back the liquidity, pulled back the water. And when the ocean pulls back, what happens to the stock market, which is the sea? The sea pulled back. Liquidity moved out of the stock market. And then if the sea moves this much, guess what happens to the puddle? The puddle moves this much. You know, that's a deep puddle, but like, you know, you get the idea. So in order for you to know when to enter, you have to watch the ocean. You have to watch this room. That's a good representation, but you have to watch the ocean. So the way we look at it is we go, okay, has the liquidity returned to the ocean? And yes, it has. Central banks have been telling us, oh, they're fighting inflation, all this stuff. They look like they're fighting inflation, but the moment the bond markets broke for a second, they figured out secretive ways to print money and pump it into the markets, and they're doing it today without anybody knowing. But we got experts watching the background, and we can watch the liquidity starting to flow into the ocean. Okay, great. So the ocean's been pulling back. Now they're starting to add water into the ocean again. They're basically creating a tsunami in the ocean. And you know, when a tsunami comes, first the sea pulls back. That's the signature of a tsunami, right? The sea will pull back, which will pull money out of the puddle. Even as the tsunami is building, the sea is being sucked back. That's exactly what's going on. There's liquidity being added at the end, but the effect still hasn't reached the oceans and still hasn't reached crypto. But the fact that liquidity is there means we got about 3 months before that ocean wave comes and knocks our puddle over. And the amount of liquidity they're pumping, it's ridiculous. It's a lot of money that they're printing and putting into the market. So what we're probably going to see is we're going to see stocks, crypto of course, but stocks recover in a very sharp manner to get everybody back onto the ship, and then we see a biblical collapse. We see that the result of that tsunami coming and hitting us and destroying the entire planet, okay? The reason why I'm saying all this stuff is because if you're not watching the ocean, you should not get into the puddle. You should not get into the puddle if you don't know what the ocean is doing. Because if you don't know a tsunami is coming, you're going to die, okay? So how do we do it? Let's pull up Trading View. This is we've done this before, so I'm gonna kind of rush through this. We need U.S. 10-year yield plus U.S. 10Y. Type in U.S. 10Y. U.S. 10Y. What? No, 10Y. Yeah. Y, right here. Yeah, and pull that up. This is the 10-year yield. No, that's not the 10-year yield. This is the 10-year yield. This is a representation of what the actual ocean is doing. When this is up, that means liquidity is flowing out. Yield is like inverse of what's actually going on in the markets, but what? Okay. No.
This is 5-year view? 1 year?
No, that's okay. Just do like 6 months. Yeah, 6-month view. Or a year. We'll do a 1 year view? No, this 1 year. Yeah. So this is so from last year until now, the liquidity has pulled back. So what did it do to crypto? Guess what the liquidity is doing now? It's starting to flow the other way, and we can watch it. This happened, and this spike scared the shit out of governments, and they're like, fuck, we're about to break the bond markets, and that means faith is going to be lost in our currencies. So then they started printing money and pumping into the market. So now this is returning. Okay? Simple terms, this up, bad for crypto. This down, good for crypto. Okay? Simple as that. Now let's go to the NASDAQ, NDX, plus NDX. NDX. Yeah, this first one. I'm rushing, I'm going to go fast through this. We do a lot deeper analysis, but this is tech stocks. Okay, this is the C. Since October until now, what has the C done? Gone down. C goes down, bad for crypto. C goes up, good for crypto. Okay, and all these things are tied together. They move in synchronicity. Now let's pull up Dixie, DXY.
Why is it tied together?
Huh?
Why is it tied together?
Because money simply moves, liquidity moves. The ocean is always tied to the sea. If you pull liquidity out of the ocean, it sucks the liquidity out of the sea.
And why do you think people are only looking in crypto?
Because people don't understand the game. People are only looking in crypto because they don't understand liquidity and how money flows. They're looking at literally like a $1 trillion puddle, like, oh my God, $1 trillion, that's a lot of money. First of all, there's not even $1 trillion in there. There's about $400 billion when you say $1 trillion of market cap. $1 trillion is such an insignificant amount in the broader picture of things. They didn't even pay attention to us until we got to 1 trillion. We're talking about hundreds of trillions of dollars per asset class. This is about 300 to 400 trillion dollar ocean that we're looking at. That's attached to a 1 point something quadrillion dollar derivatives metaverse ocean that they've created.
So is the $1 trillion in crypto basically is also the real money that's coming in, that's flowing inside, or is it?
$1 trillion is the market cap that says that if we were to sell all the crypto today at today's prices, which hypothetically, it's a hypothetical, you can't do that. But it says if we sold everything today, this would be the value that comes out. But in reality, about half that amount is actually the amount of cash that's in there. You know, and to us, $500 billion sounds like a lot. To these guys, $500 billion is a rounding error. Okay, so
What is the risk that the people, that crypto people is looking there only crypto, but not looking at other things?
that's the thing. Like crypto people are young. We're babies. We think the world works the way that it's worked for the last 20 years. That's not how the world works. That's a fake world we've been living in. Okay? Stocks don't always go up. As a matter of fact, every 100 years, they destroy all of your wealth, 100% of the time. Okay? So, yeah. Like, but that's why young people don't know to look at this stuff, because it's not cool anymore. bonds and stocks and real estate it's not really our jam anymore. We like digital assets. It's like, great, but these assets are the ones who are going to give you the money to flood in. But okay, Dixie, DXY. So when money flows out of the ocean, one of the places that it flows to is the dollar, is currencies, right? That's also a ocean, but that's also a sea that's attached to the market. So same thing. When this is up, dollar's sucking in the liquidity, and it's been doing it since back when shit started, right? Dollar's sucking in the liquidity, which means bad for crypto. When this drops, that means liquidity is starting to be released from the dollar back to crypto or risk-on assets. We're already seeing this happen. My point with all this stuff is, if you don't know these dynamics, you're as lost as everybody else. You're sitting in a puddle, but you don't understand that there's a sea for you to watch and an ocean for you to watch. So we'll do deeper dives into all this stuff. My point was, this is the macro analysis that you need to do to even get to the point of thinking about starting to enter the markets. Look at this room. If this room's empty, check. Dollar is down, check. Bond yields are going, in this environment, bond yields are going down, check. When they're printing money, if bond yields are going up, check. So I'm going to create a checklist that I'm going to share with everybody that you can use to have a macro analysis checklist. And they'll be like, are central banks printing? Is liquidity being added? What's the narrative and all that bullshit.
So you can see the central bank is printing dollar the way that goes up.
This is not printing dollars. This is the value of each dollar going up. This is actually a representation of the dollar against all other currencies. The reason why the dollar crushed the euro, crushed the yen, crushed the Turkish lira, crushed everything except for the Indonesian rupiah, it's because this thing's going up. It's going up in value against everything else. That means everything else is dying against it.
Every fiat currency.
Every fiat currency, yeah. That's why now the euro and the dollar are basically the same, and the euro is going to die. So if you have your money in euros, get your money out of euros. You should have got your money out of euros a little while back. But okay. So now the ocean seems to be moving the right way. This is starting to turn. Remember, these things take months to turn. Months. They don't move at crypto levels. So you have time. Go sip some coconuts, hang out, watch the process happen. Once all the signals slowly start to turn, that's when we start to really nibble on the markets. Okay, that's good. Let's pull up Glassnode. Now, we paid $10,000 for the subscription, but it gives you all the details necessary.
Can you make like black, something like
Yeah, right here. And then go to dashboard. Dashboard. And then open up in separate tabs. No, my dashboards. Actually, no, first go to market tops and bottoms. Can I have the cereal? Thank you.
market top and bottoms?
No, that's core on chain. Oh, you opened it already? Yeah, okay. So yeah, go to the other ones, please. Go to my dashboards at the top. My dashboards, yeah. And open up whale watching, futures, psychology, and profits. Great thing about crypto is we have data from the blockchain. Immutable data from the blockchain. So you can read things happening that they're not telling you. And once you start to paint pictures of what's going on, that really gives you the confidence of what is the puddle doing. And it has nothing to do with drawing lines. I mean, it's kind of lines, but it has nothing to do with the TA side of things. I love TA as long as all of this agrees and then the environment moves, then TA comes in. Because now the environment is supporting the direction that the market's moving, and then TA becomes amazing. Okay, that one, market tops and bottoms. Okay, why is it showing up like this? Can you click this in a new tab? Reserve risk, yeah. So open up reserve risk. Where did it open? So this is a metric that explains when it loads up next week, come back, and then we'll show you guys the metric itself. It'll take a while. This is a metric that explains the, great, so this is the price of Bitcoin, this white line. This orange line is a representation of the confidence in the market and the prices. Simple way of thinking about it. It's a ratio of confidence in prices. High means high prices, low confidence. See this red range that you can barely see? That's the prices are way too high and the confidence is way too low. As soon as you get to this red range, you dump hard, right? But as soon as you get to this green range, that means prices are super low and the confidence is super high. And guess where we are? Okay, great. Are we going to go lower? Yes. I'm pumped for it going lower. I'm bleeding. I'm bleeding on the ground, and I love it because I have cash flow. It's like bleed more, crush the market more. I'll just keep putting more cash into it, bring my cost basis back down again, right? Great. Reserve risk is telling us, oh my fucking God, this opportunity hasn't been like this since COVID, since 2015, 16. That's it. Those are the only 2 times you've had an opportunity like that. This is even a better opportunity than COVID. Great, okay, so that's one indicator. Now let's go to the next one. Go back to the front one. Yeah, tops and bottoms. Entity adjusted dormancy flow. How old are the coins that are flowing? There's a green range here. We're below that green range. Wow, never been there. Never been that low. Great, scroll down a little bit. Market value and realized value on a Z-score. Okay, red, sell, green, buy. Guess where we are? Super buy zone. Fantastic. Looking good. These opportunities do not come around. We've waited, in my 10 years, we've had like 2 or 3 of these. And every time people look back and go, fuck, I should have bought Bitcoin during COVID. Yeah, you didn't because you weren't in the room. You did the same shit as always. COVID happened, and you're so worried about getting a flu, last thing you think about is Bitcoin. And guess when it pumped from? Guess when it did a 20x from? The moment you weren't looking. Okay? HODL ratio in the buy range. HODL waves, buy range. I'm not going to go through too much detail on this. We've done on-chain stuff. We'll do it again. Let's go down. Down, 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 down. This we'll go through on the psychology. One more, please. PO multiple, a representation of what miners are doing. Again, stupid buy zone. It never gets this low. You get the idea. Okay, this is just market tops and bottoms indicators. Now let's go to this one, the first one. Okay, if you want to know what to do, watch the whales. Whale watching should be your favorite thing to do in crypto.
Who are the whales?
The whales are the people with all the money. And so scroll up. And then highlight this. Okay, so these are the whales. Whoa, where are you going? Just put the mouse here. Yeah, put the mouse here. Yeah, leave it there. Leave the mouse here. Yeah, hold it there. This is 0.1 Bitcoin, 1 Bitcoin, 10 Bitcoin, 100 Bitcoin, 1,000 Bitcoin, and 10,000 Bitcoin. I made this metric to give me a full representation of which way each cohort is going. And now can you highlight from here to here, please? Yeah, click and drag. Okay, great. By the way, this is the price of Bitcoin. I know this gets a little confusing sometimes. This is the price of Bitcoin.
This is who?
The price of Bitcoin. The white line is the price of Bitcoin. And then these colors. Wait, don't move it. Can you please just move the mouse here and leave it here? Yeah. These are the colors that represent the right people. So the pink are the biggest whales. The blue are the 1,000 Bitcoin whales. They're still whales. The whatever this is, aqua, is still whales. 100 Bitcoin still makes you a whale. The 10 Bitcoin is where the normies start to come in, right? And the 1 Bitcoin are the absolute normies. Those we call like, I don't know, some small fish. And then the shrimp are the ones up there. Yeah, this is like plankton, right? Sardines, sharks, killer whales, bigger whales, blue whales, great white, pink whales, okay? But look at what they're doing now. Look at what they're doing now. The little guys went off on a riot. And the little guys are not just us. They're algorithms. There are a million different algorithms that are all running a program to steal all your money, okay? So this isn't us. This is still them. But their algorithms they've already started accumulating heavily. The 1,000 people are just dumped, and they're going to dump harder. The really big whales, the 10,000ers, are on the way up. The other ones are on the way up, and these guys, the 1 One Bitcoiners, they're just kind of going sideways. So the normies are doing this. And
What does it mean up and down?
up means they're buying more Bitcoin. This is how many addresses, what is this? How many addresses are holding this much Bitcoin? This is a representation of how many addresses are holding the Bitcoin. And there's no other place to hold addresses. Like, there's no other addresses to hold, so you can see a full view of what's going on. But my point is, they're mostly up and to the right already, because they have to spend trillions of dollars. So they start 6 months ahead of time to accumulate. They don't worry about the bottom. They just worry about lower. They care about discounted rates. Can you get me a napkin, please? Like a tissue or something? My nose is flowing here. Thank you. Okay, so the whales are telling us they've already started to buy, but there's other metrics that we look at where we can see institutional activity, and institutional activity hasn't returned in a way for us to be able to say institutions are buying in a big way, but whales are starting to accumulate. Great, okay, so whales are telling us to buy. All those things are starting to tell us to buy. Let's go to the next tab. This is the tail that wags the dog. We're over here buying Bitcoin and crypto like, I'm going to buy it, and the price is going to go up. That's not even the game that's being played. That's like a small piece of the crypto game that's being played. Thank you, thank you, thank you, thank you, thank you. Okay, there we go.
Good UN.
The real game being played, smart money plays this game. Okay? If I have a bunch of Bitcoin here, right? What would I do? What would I do? Everybody thinks it's going up. I would go to the derivatives markets, futures markets, make a bet with 100,000 Bitcoin, and say, I'll bet 100,000 Bitcoin with 10x leverage, which means I'll make a million Bitcoin. Okay? I'll make a million Bitcoin if I win this bet that the price goes down. Great, I bet 100,000 Bitcoin. I come over here and I dump my other 100,000 Bitcoin. You all think the price is going up, price goes down, my bet comes true. Guess what I made? A million Bitcoin. Guess what you made? I made your money. Okay, and then guess what happened? The market dumped, and then guess what you're gonna do? Dump more. And guess what you're gonna do? Drive the price even lower. And now who has a million Bitcoin of purchasing power to buy up the floor? I do. Okay, and I just wait. I just keep selling more, and Celsius has crashed, Luna's gone, da, 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 scared. And then I'm sitting there with my million Bitcoins worth of power on the side. Okay, prices are down here. I start buying little Bitcoins. You know, I get up to buying another 500,000 Bitcoin. Guess what's gonna happen when I buy 500,000 Bitcoin? Price is gonna go up, right? Then what I'm gonna do? What am I gonna do? I'm gonna make a bet that the price goes down. Now I'm gonna bet 500,000 Bitcoin with 10x leverage. You're gonna pay me 5 million Bitcoin if the price goes down, especially when the narrative shifts. Great. They'll convince us all that we're all going up. They'll dump it again. That guy makes 5 million Bitcoin. And that person did not do it to buy Bitcoin. They did it to make bets on the prices going up and down. So you have to watch the futures markets. You have to watch the leverage that's in the futures market. So this graph is a representation of how much leverage just means how many bets are being made on debt, are being made from Bitcoin denominated capital. People are literally betting Bitcoin, not money, Bitcoin. And this is what's happened in the most recent time. Everybody's betting that we are going to go up. And you can see that if you go down a little bit. This is cash. You can see cash denominated is going down because people from Wall Street are scared and cash is sparse. This leverage ratio tells me which direction the bets are being made. When this leverage ratio goes up, that means people are betting that the price goes up. So then you know what's going to happen? It's going to go down. It's going to go down. Because some guy on the other side is making a massive bet that these idiots think now the price is going up, just wait until I drop it to 15 and you cry home because all your bets are wiped away. Yeah, exactly. We have a Chinese whale dumping video that we've done before, and it's literally a bunch of Chinese whales sitting together and they go 3, 2, 1, and they all sell at once. And then you see the candle drop, and the candle down is green, the candle up is red for them. And this is like live. This is how this game is being played. And you're over here like, draw the line, When the line goes above the line, I'm going to put my pennies inside, and I'm going to make a lot of money. No, that's not how this game works. But there you go, Chinese dumping video. We got to turn on the audio, but it's like, yeah. Like 3, 2, 1, boom. They just dump on your ass. They make all of your money. That's why they have all the money in the first place, right? Okay, so futures. So until, let's go back up. Until, more, right here. Until this dumps, I'm not entering the market because that needs to flush. Wall Street never leaves money on the table. Never. Not your money for sure, right? So now there's all this Bitcoin money, and Bitcoin is the name of the game. The dollars, fuck the dollars. People have bet too many Bitcoin that the price goes up, so almost certainly the price is going to go down from now until maybe September, somewhere around September. Okay, so a bunch of my signals are saying go this way. This room's telling me go this way, but some of my signals are like, nah, dynamics have not played out in the right way for us to really start nibbling at the markets. Okay, we're building a story. All right, let's go to next one. This one is my favorite. This one's my favorite because this tells me what you're thinking. Remember, Wall Street cheat sheet is only emotions. Investing is only emotions. The only thing I need to do is scare the shit out of you into selling it. And then the only other thing I need to do is make you so greedy that you don't sell it at 70K. You know, I remember it was a 67 in February or whatever. And there's people sitting on so much profits, and they come to me and they're like, "What should I do?" And I was like, "Take the damn profit. You have so much profit. Take the profit." They didn't. They go down to May, and then they're like, "The only thing I wish is I wish I sold it at 67." It goes back to 69. Those exact same people, I'm like, "It's at 69 now. You said you wanted to take profits at 67. It's at 69. We're not going up." They're like, "You're an idiot. All of YouTube is telling me we're going to go up. What's that fucking analyst? He's telling me we're all going to go up." And I was like, "Yeah, but you have profit. You said you wanted to take it early, and now you're back at the same opportunity, and you won't take it. It's because you're greedy at that point." What we need you to do, can you pull up the Wall Street cheat sheet again? So these are the emotions, okay? Down here, you're in a state of disbelief, then hope, then optimism. This is where you become greedy, you become optimistic, then you start believing it, then you tell grandma to put her life savings into it, then you get high off of how much money you think you're making on a screen, and then you're so high off of it, smart money takes your money, and you get complacent about, you're like, it's okay, it's gonna go back up, we're going to 100K, I just told we're gonna go to 100K. Then January, February, March, April, oh my God, Luna, okay? And then what the fuck, who let Luna happen? And who let Celsius have this stuff? And oh my God, I just lost all my money, I think I'm gonna sell it here, okay? So now we go to the psychology chart. These exact same emotions are charted for us without ever asking a question. We don't need to ask you a question because your emotions are directly tied to the amount of profit that's in there. So this is NUPL, net unrealized profit and loss, which means how much profit or loss is sitting for which cohort in the market, okay? This is just general, but this is what we look at. Long-term holder NUPL and short-term holder NUPL. Because the long-term holder's psychology is different. So can we open this in a new tab and this in a new tab, please? This is how long-term holders think and feel. Okay, same thing, capitulation, then it goes to hope, optimism, belief, euphoria, and then on the other side it goes to greed, then denial, anxiety, fear, back to capitulation. Capitulation is selling it at a loss, okay, you capitulate. This is how this market moves, emotionally speaking. Long-term holders, they're smart now. So they almost, like this line is the break-even line for long-term holders. They almost never sell lower than where they bought it. They never capitulate. Because we know the game. I'm like, I'll just outpatient you. I'm not selling it lower than where I bought it. So long-term holders now went into what is this, fear? No, this is, they came back into anxiety, anxious optimism, then went down into fear. They barely capitulated and they're back into a state of fear, but they're still making profits, okay? Short-term holders, and this is why we call them dumb money, because this is how dumb money thinks, okay? Always, always, always capitulating. Always just selling it at a loss. Barely just coming out into a state of fear the whole time when you should have actually been non-fearful. And then just barely coming into a state of anxiety before the smart money goes, hey, these short-term holders are getting a little too ahead of themselves. Grandma just put her money in. It's time to scare the shit out of them. So it's like, okay, boom. Back down to fear, back down to capitulation, lose all your money. Just back up to fear. Can you zoom into this? Just this much? Like literally, the moment the top happened, it happened when the short-term holders just for a moment started to believe that they can make money in this space. And that means they came in and they bought the top right here. This is all them buying, but they literally bought the top. And the smart money's like, okay, game is done. They've now held the coins, time to dump it on them, and they've been losing money the whole time. Okay? And the psychology, the juxtaposition of the psychology of the long-term holders and short-term holders tells you a story. When I want to invest is when short-term holders are just getting obliterated. Even the long-term holders are starting to like take little losses, which means because the whole game is to pry supply from your cold dead hands. You are holding the future of the world. Okay? And as smart money, my goal is to pry it from your cold, dead, unregulated hands because I couldn't get there first. I need regulations to move my $100 trillion into a space. Otherwise, like my investors and my regulations don't allow me to move it. So what I need you to do is scare the shit out of you and take the supply from you. And this is the process. What was the question?
Wait.
Yeah, just give this guy a permanent mic. Just hook him up to a permanent mic.
So the graph you showed on long-term holders and short-term holders is interesting, but I think it's even more interesting when you compare the two and when you superpose the two graphs. What you will see is that you see the price of Bitcoin going up, or the fluctuation and the volatility of Bitcoin, but you see that the short-term holders and the long-term holders, so you consider a Bitcoin long-term holder at around 155 days of Bitcoin being in your wallet. So you're becoming a long-term holder when you hold Bitcoin for more than 155 days. What you see is that there's a total opposite on the two charts. So when the long-term holders sell, you see the short-term holders buying. When the long-term holder buy, you see the short-term holders selling. It's because when the people are short-term holders, like 99% of short-term holders don't understand what they buy. They don't understand the market they are entering in.
The value
that is brought by the technology, which means that they buy at the wrong moment. They buy from FOMO. They buy from hype. Most of the short-term holders
buy because their friend tells them that they're making a lot of money.
Exactly.
By the time your friend tells you they're making a lot of money, they've already made a lot of money, or supposedly made a lot of money. That's not the time you enter, but short-term holders do that. And plus, then they buy shit. 60% of this market is legit shit. It's legit, completely worthless code. 30% of this market is not like legit shit, but it's the Lunas. It's shit with like a nice veneer on top. And it makes you really get convinced, like, man, this thing must be great. I remember EOS. Last cycle, it was EOS. We saw EOS, looked at the code, and I was like, wow. And a complete virtualized machine. A complete virtual machine environment can do anything. I can literally take this entire tech and I can represent the inside of the code. And we're like, wow, this is insane. EOS is going to crush it. Do you guys even know EOS? Anybody, can you spell EOS for me? Have you ever even heard of it? That's what happens, right? 30% of this world is EOSs who look really good, but they're shit. There's only 10% of this market even worth investing in. We're going to look at how to spot those.
How do you explain the crash of EOS? Can you repeat the question?
How do you explain the crash of EOS? It's not about the project. It's about who runs the game, who owns the game. If it's not made by people who own the game, you're not doing shit. You know who owns the game? World Economic Forum, International Monetary Fund, World Bank, world. They're the ones who own the game. And if they're not the ones who built it, like you think some little Korean kid is going to be allowed to make a version of dollar and back it by some shit that he made, and when they serve him a subpoena, he just goes, fuck you, and he leaves the US? They murder people for less than that. They murder people for no reason. So the moment that happened, I was like, oh, he's fucked. You're all fucked. You're all fucked. Plus there's a hack left inside of Luna. Anybody can see a monetary hack inside of it that Wall Street will just take it. So what explains it is the fact that it's not owned by the right people. So what I do is I find the things that are owned by the people who run the world. And those people release lengthy documents. You know what the problem with the world nowadays is? Nobody reads the source. Read the article about the article about the article. Find the source. In their sources, central banks, governments, world owners, World Economic Forum, all these biggest players who run the world, they're telling you with photos, these are the ones we're going to use. You can build whatever the fuck you want. These are the ones we're going to use. So then you go, okay, that's where you're going to put your money? That's where the trillions of dollars are going to come? Yes. Okay, I'll buy them, please. Like, it's not that complicated. But the point is, we are at a great time to buy. We're probably going to have another spike down where even long-term holders capitulate, because long-term holders are the hardest to pry supply from, but they're going to do it. Okay, great. Next, please. Not entity adjusted. This. Okay, profit taking. How's the profit taking going? Who's taking profit? Long-term holders, short-term holders? Are the long-term holders mainly dumping, or are they buying? You know? You get the idea. There's 1,000 different angles that you could take to build a story of what's actually going on in the space in just the puddle itself, and then you combine it with the story of what's going on in the stocks ocean, and then you combine it with the story of what's going on in the broader stocks sea, and then in what's going on in the broader debt-based oceans. Now you have a realistic understanding of what's going on. Because when you're like, first of all, you don't make money, you take money. They make money. They create money. We take money. So you have to know where the money is, which way it's going, before you even think about taking money. Okay, great. Okay. Man, it took an hour just to explain all that stuff. Okay. So when we enter, can you pull up Bitcoin chart? Just the regular Bitcoin chart on TradingView. When you enter is, first of all, when depression happens, nobody wants to talk about it, nobody wants to touch it, everybody's losing money. You can't find anybody who's getting rich. They're all getting poor. When the dollar's down, dollar's on the downwards trajectory, so it's dumping liquidity into the markets. When bonds are pushing money into risk-on assets, that moves stocks up. Then all of these indicators are all screaming to you, okay, I've hit bottoms, we're good to go, you know. And you never try to enter the bottom. Trying to enter at the bottom is one of the dumbest things. But when all these things line up, that's when we go, okay, let's enter. Now the other thing with it is, can we go to 5-year? The other thing with it is, here's how you do it, okay? Enter in this range, exit in this range. I don't care where. Just be patient enough to play the 4-year cycles and just enter in this range. You know why this range is like this? Because this is how long it takes smart money to load up. Let's go to the whale watching dashboard and go down to 1,000 Bitcoin numbers. Down, 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 down. Yeah, 1,000 Bitcoin numbers. Okay. And then zoom out. Okay. And you can see the whales. The whales play this game perfectly, right? When nobody's looking, everybody's sad, whales start loading up. Then the whales run it up, and 6 months ahead of everybody else coming in, the whales start dumping. The whales gave us a signal 6 months, almost 6 months ahead of time. And then they never returned. And everybody was like, we're going to 100. And I was like, I don't know whose money you're planning on taking, but the whales are not back. Their money's not back. You're all going to lose money to each other, to the whales, actually. Okay, this is what they do, okay? Market dumps. Right when it's dumped, guess what they started doing? Accumulating. Years of accumulation. Years of accumulation. And then when did the market pump? From here, right? They pump up the market, and then right here, put the mouse right here, right, a little bit to the right, yeah, right there. And that's February 21st of 2021. That's when the whales started dumping. And the actual dump happened in May. So it took from February until May for them to dump on you, because they have hundreds of billions of dollars, and we have pennies. It takes a lot of suckers to come in and buy it all up. Then it dumped, and then guess what they did? Prices dumped, accumulation. They're now starting to accumulate. So you can follow the big whales, and you can actually have a good idea of what they're doing and do it like them. Okay, so the point of all this was enter in the bottom range. It'll be a range. It'll just kind of do this. And especially our ADD, instant gratification generations, like, it's been 4 months, I'm just doing this, I'm disinterested. And it'll do that again and again and again for months and months and months until everybody gets bored, and that's when you should be buying.
Yes, just to add something to what you're saying, which is very interesting. There's numbers. If today we have something that is called on-chain analysis. This is free insight. This is the most important thing that you can use in the crypto space to be able to make money. If you trade crypto without on-chain analysis, you are a monkey. You are absolutely blind.
I mean, I'm a monkey no matter what, but
So that's why you need to use what he's using. On-chain analysis will give you all the insight that you want, that you need to be able to trade crypto efficiently. And the thing is, what we see and the numbers we have is it's like just incredible insight. This is gold insight. What we see is that 92% of short-term holders lose money. 100% of long-term holders that have held Bitcoin for more than 3 years are winning money. 100% of people holding Bitcoin for more than 3 years are winning money.
Nobody has ever lost a penny holding the right shit in crypto. Nobody has ever lost a penny holding the right shit in crypto for long enough.
Exactly. So use on-chain analysis to be able to know what the smart people are doing to follow the right calls, to follow the right alphas, and use this insight to be able to make the right decisions at the right moment. Don't be stupid, don't be a monkey, don't trade blindly, and just hold long term if you believe and if you do the right market analysis.
That's one way of doing it. I'm not a firm believer in holding too long term. I like to hold from like here, we entered in this range, and I sold it here. And then I rebought here, and I sold it here. Because my goal is to go to the dollar in the end always, because the thing is so dynamic that, but think about it. 2020 bought it, sipped coconuts for a year, okay? Made one sale in 2021, made one purchase in 2021, and made another sale. So three total trades in 2 years, 2.5 years.
But you're considered a long-term holder.
Exactly, 100%. I totally agree with what you're saying. That's why we're going to look at like a few different ways of participating in the market, right? That's actually going to be next time. This is entering the markets. Next time it's going to be staying in the markets and different dynamics that play out. But that's 100% true. The problem is you're listening to the wrong people. You're listening to toddlers. You're listening to babies. They just took their diaper off and then they started drawing lines. That's who you're listening to. Now go look at your YouTube list that you listen to, and tell me if they've lived longer than 20 years of adult life. Because the last 20 years has been a fake shit show. That's not how the world works. I listen to 40, 50-year-olds. And then I extrapolated down to crypto. You know, like on-chain analysis, only the young people know because it's a brand new game. But everything else, if you're listening to toddlers and that's who you're making your decisions from, you're going to get taught lessons like toddlers get taught lessons, okay? So pick the right expertise. Also pick people who tell you crypto sucks. That is called blockchain. It's not here to give you freedom. It's here to block you and chain you into a new system. It is your prison that you're building yourself, okay? If somebody does not give you that balanced perspective, they're pushing you in one direction. Okay, so now the other thing is then you should have learned about crypto. That's why we're doing this in the first place. You should have learned about crypto. If you're buying something, you got to answer the question, what does it do? In less than 3 sentences, and where's the money coming from? 2 questions. Your friend goes, buy this coin. You go, what does it do? And your friend will be like, what? You go, what does it do? And they go, it makes money? You go, that's not a function of society. Like, making money is not a value. And then you go, where's the money coming from? They go, I don't know, man, just buy it. And you go, no, if you don't know where the money's coming from, it's coming from you. If you can't answer the question of where the money's coming from, then it's coming from you. That's a classic Ponzi scheme check, okay? Then you get to the point of selecting your strategy. What am I going to do? Am I a hodler? Or do I hodl for years and just wait everything out? That's a great strategy. I do that for most of the time. If I hadn't sold here, I would have just waited. And once we got up here, I would have sold at the second opportunity anyway. But what is my strategy? Right? How much risk do I take? What is risk? Which one's risky? Which one's not risky? If you haven't done that analysis, again, you're a blind man playing a one-eyed man's game, okay? And you have this written down. I create 70-page documents for people with strategies to make sure that they understand exactly the steps necessary of exactly what they want to do and what their plan is. Are they going to buy, and the moment it goes up, they're going to take some profits, and the moment it goes up more, they're going to take some profits? Or are they going to use trend-based stop losses to follow it up? Or are they going to have a de-risking strategy so that I put in 100,000, once it turns to 200,000, I take my 100,000 out? Or are they going to just hold for a long period of time to make sure that you always get to the point of making money? Strategy. What's your strategy? What's your plan? How much risk are you taking? How much of your money is going into how risky coins? If you're a high-risk investor, and if a high-risk investment is going to make you 10x, 20x, 50x, then I don't need to put more than 10% into high risk, because if it's going to make me 10x, then I'll risk 10%. If I lose my 10%, doesn't matter. But if it makes me 100% or 500% of my total portfolio, I'm crushing it. So you have to pick tranches of low, medium, and high risk and invest into them with some strategy. Okay, so let's say you figured all that out. Don't put all your money in crypto. Don't put all your money in crypto. Crypto makes you money once every few years. Revenue streams generate cash flow every month. Some of them generate cash flow every 30 seconds. Okay, we got revenue streams that are generating cash flow as I speak. And by the end of this talk, we're going to have more cash flow in. So select your revenue streams. If you're somebody who just goes and does a job and then puts all your money in crypto and sits there with no coconuts, you're completely fucking missing the point. You want to sit there for 4 years without coconuts? And then what? Then you're going to be old and your knees don't fucking work, and then you're going to have money. That's so stupid. Okay? So figure out how much of your money is going into how many revenue streams. If you're not making money in more than 3 places at once, you're missing the game. You're playing the old game. You're a slave to somebody else. And we've shown so many ways to make money, and we help so many people make we help so many people make so much money that's either adjacent to crypto or has nothing to do with crypto. So some of your money needs to go somewhere where there's enough cash flow so you can sip coconuts the whole time. So you can live beautifully and live nice and enjoy life while you're young. While the crypto is going to do its thing, and then, I don't know, 2 years, 3 years later, it makes money. I don't care. I'm making money the whole time. Okay? How much of your money goes into revenue streams? That money does not go into crypto. Okay, now we got the rest of the chunk. How do we put it? Where do we put it? Side note, you should have a wealth map. You should have a wealth map. You should know where all of your money is sitting, all of it, where it's being invested, where it's being deployed, which are capital sinks that are sucking money from you and which ones are giving you money back, and you should have a balance of those things and have it in multiple asset classes, a bit in commodities, a bit in stocks, a bit in bonds. I mean, I don't believe in buying bonds, but my idea is you would spread it out in a way that fits your needs. If you're somebody really old, you love bonds. So okay, so we keep some of it exposed to bonds or real estate or whatever. Okay? All right. Now let's get to the meat and potatoes, selecting the coins. Selecting the coins. I know everybody's always like, just tell me the fucking coins. And it's like, I can, you'll lose all of your money. Bitcoin, go lose all of your money in Bitcoin. Because you're the only idiot who's allowed to do it, right? Selecting the coins. I select the coins that they, the owners of the world, the Black Rocks, tell me to buy. It's not very complicated. I just go, excuse me, Mr. or Mrs. Whale, where are you going to put all your money? And they go, in our friend's project, of course, the ones that we own. Okay, great. Okay, I'll just go look up like who owns this project, who are they connected to, who are the VCs and the CEOs and the C-suite teams, who's behind these guys. And the moment you get to like Rothschild, Rockefeller, just a family name with the R on the front of it, that goes on the checklist. That goes on the whoa. Go read the World Economic Forum's documents. They'll give you the list. Go read the FATF's documents. They'll give you an idea. Go read the World Bank's documents, the Federal Reserve's documents, the private industry's documents, and Andreessen Horowitz documents. Read. They give you photos. You don't even have to read the whole thing. Just go scroll down to the photos, and they'll tell you which projects they're supporting. Okay? Those are the ones that we buy. That's my rule. Or I will look at the way the world is shifting, and I will see dynamics playing out in a way that I know as an electronics engineer that certain technologies are here to take over the world, and I will participate in those technologies in a way that allows me to get ahead of that game, like metaverse and gaming. That's the hottest thing right now. DeFi came along, I didn't touch DeFi. Because it was like, DeFi, what are we doing? We're taking hard-earned money, we're turning it into a good coin, and then we're turning it into a shit coin, and we're staking the shit coin, and then the shit coin turns into another shit coin, and then we stake that shit coin, and it makes me a third shit coin. Oh, fantastic. What a brilliant model you've created. You're solving all the financial problems of the central finance world by creating more shit that's way worse than the financial world. At least they have regulations. At least they know what the fuck they're doing with money. Okay? Gaming and metaverse, I can get along with that. I've been waiting for the metaverse to go live for a long period of time. I believe in it. I know about it. I can build it. I have an edge. I have an understanding of how people communicate. I have so much knowledge that gives me a special edge of participating in that space. So that's where that was on my list for sure. Okay, so the way you pick the coins, the way I pick the coins, is I imagine, is this thing gonna last 10 years? 50 years? 100 years? 500 years? Have you ever thought about something existing for 500 years? That's so far beyond our like toddler mindsets. Like, I've only been alive for 40 seconds. What do you mean 500 years? I don't think about 500 years. Yeah, you're probably gonna live like 100 years easily, okay? So if you're not thinking about things that are gonna last 100 years, again, you're not playing the right game, because there are killers with hundreds of billions of dollars, and their strategies are infinite strategies. Listen to Simon Sinek, Infinite Players versus Finite Players, and it gives you a great description of Apple's playing the infinite game, while Microsoft is playing the finite game. Microsoft is competing against Apple. Apple's not competing against Microsoft. They're creating the game. They're crushing it. And they have an infinite, there is no end point. Okay? So is this thing going to be here infinitely? Plus, if it's made by the people who own the world and they're building the next stage of the world, all these things have confluence and they start to tell you a story. All right. Okay. But then we got to calculate the risk. How risky is something? How do I know the risk of a crypto? Simple way of doing it. Of course, you do the analysis of who owns it, what does it do, where's the money coming from. As long as it passes all those checks, then you look at, okay, what is the market cap? If something's supposedly worth $300 billion, that means somebody's at least put $150 billion of cash inside. Whoever put $150,000 million of cash inside has maybe done a little bit of research. Okay, so that's safe. I'm going to leverage their research to be like, this is low risk. Bitcoin is low risk.
Is it true though? I mean,
Sorry?
is it a good approach though? I mean, you can trust the smart money, right? The VC.
Yeah, I mean, Luna was 80 billion, and then what happened?
Luna had a lot of
Yeah,
money.
so this isn't a surefire thing. These are calculations that reduce your likelihood of losing money. Everything we do is focused on not losing money. This is one methodology that works well enough, but as long as, who owns it? A Korean kid? It's off the list. Won't, like, oh, he's fucking with the people who own the world?
Right?
Yeah.
Their objective is to make money as well. So if you see that a VC already owns money and it entered a pre-sale or
some seed round,
Yeah.
then their objective is to sell it
Yeah.
to you.
Yeah. I don't really look at VCs too much. I'm talking about governments and big players and the owners of the world, not VCs. They own the VC. They own the companies that own the VCs.
Okay,
You know,
but
because VCs throw money at everything. VCs expect to lose money on 80 to 90% of the projects to make shit tons of money on 10% of the projects.
sure,
Yeah.
sure.
Only reason I said Andreessen Horowitz was because they're very, very good at doing this analysis that we're talking about. Yeah.
Okay.
No, keep going. Yeah.
Nobody could predict Luna because Luna was not a problem of people. Luna was a problem. It was a technical problem.
Hey. I predicted Luna the whole time.
Yes,
Go
no.
back and watch all my content. I told you Luna's gonna die. Next is probably gonna be what's it called? No, the T, not Tether, of course, but not Tezos, Tron. Tron is gonna die next.
Like Luna, when it was, you could feel like Celsius, for example. You could feel things coming. You could feel that there were some problems, but you couldn't predict it. Everybody that
Why
says,
not?
"Oh, I predicted Luna," is lying.
Why not?
Like it's
If
not
it's a technical problem, then you can see it straight away.
absolutely.
Yeah.
But it's
Lynn
like,
Alden
there
called
are
it a long
many
time ago.
Algorithmic stable coins. So you couldn't say, "Oh, this one is gonna fail." You couldn't say like Luna was gonna fail. Now when today you have the informations of today, and you saw, "Oh, Luna crashed." Now you can say, "Oh, you see, I was right," etc., etc. But it's not how it works. It's
No,
But
you
why
could,
not?
I could totally see it. And this is why I didn't let anybody in my community enter Luna. And the people, I literally had a friend, took 130,000 and turned it into 1.6 million, and he still didn't take the money and it crashed. We told people not to enter Luna because you could see this hack from a mile away. This is the same hack that Soros did on the British pound back in the day. What? Who? Yeah, 50-year-olds. 50-year-olds will tell you this game like this. Wall Street knows this hack like nothing. I've studied this hack. I just enjoy studying the fuckery that they do, and this is a classic hack. He hacked the British pound and took £1 billion from the Central Bank of England with this exact same hack, what Wall Street just did. So you can see it coming from a mile away. But here's a simple checklist. Who owns it? Korean kid? No.
And the
Korean-
VCs, right?
And VCs, fuck the VCs, I don't care. But like, who's running it? Korean kid. Who's behind him? Nobody. Oh, the other people served him a subpoena. He said, fuck you. It's done. It's over. You're going to create the US dollar, the thing they murder people for, as a Korean kid? Why am I saying Tron? It's owned by some Chinese guy. So guess what they do to China? I mean, just do the calculation yourself. So you can see this coming from miles away. You just need to do this analysis on the back end. Who owns it? Is it the owners of the world? If not, then it's going to die. Simple as that. It might survive, but I'd rather not take the chance. Simple as that. And Luna was making the most amount of money. People were like, we're crushing everything. And it's like, no, you're not. You didn't take the money.
Yeah, no, you're right. On this point, I'm not totally agreeing on Luna because it's a multifactorial equation which is very, very complex. When you have the insight and the informations that we have
What's
today.
complex about it?
Sorry?
What's complex about the Luna case, really?
Here's the thing. The FATF, the Financial Action Task Force, released their recommendations 2.5 years ago, and we presented them. And from that point, I was like, what is going to happen is stablecoins are not going to be algorithmically allowed to be backed unless it's a certain set of assets that they themselves own and have said are the ones that will allow you to back it by. And they said that 2.5 years ago. We did a presentation and went, this is what's going to happen. Anybody creating a stable coin that's algorithmic, that's backed by nothing, by something that's not created by them, is going to die. So you could, before Luna was even created, we could see this. But you just had to go read the FATF documents. The FATF documents, people don't even know what the FATF is. The FATF controls the entire financial system and all the regulations of the financial system. And they control how dollars are printed. So they told you 2.5 years ago, do not do this. Kid comes in, tries to do it, gets destroyed. Same thing's gonna happen to Tether, right? So you can see it coming from miles away. You just have to do macro analysis on all this stuff, and you have to understand the game that's already been played for the last 200 years, basically.
Yeah. So what I wanted to say is, the point on smart money and VCs is very important. When you study, when you do a lot of on-chain analysis, and when you study the projects, you start seeing patterns in the VCs that invest in projects because it's a virtuous circle. Like the same VCs and the same smart money and the same whales invest in the same projects and make the same money all the time. That's why nothing is random. Randomness doesn't exist. Randomness is just factors that you don't understand because the equation and the big picture is too big for your brain to comprehend. But there is no randomness in the market. So if this project went from 2 cents to fucking $100, there's a reason why. And most of the time, if you look at it, it's exactly what Sim said, is that you see that it's the same people behind it. It's because they have a lot of money. They have a lot of connections. When you have a big capital, I'm going to take one example, Pantera, for example. Pantera Capital, most of the projects that they invested in exploded. Why? Because they have so much money and they have so much connections that when they invest in a project, they believe in the project in a way, so technically it's going to be good, the team is going to be good, and the money that they are going to inject in the project is going to make a virtuous circle because the money that there's so much money in the project that it's going to be very good marketing, even better team, even better technology, etc. So the project is automatically going to explode.
And they
it's
own
not
the world.
100% sure, but the chances are very high. So if you want to invest smartly, you need to follow the smart money, you need to follow the whales, you need to follow the VCs, you need to follow on-chain analysis to be able to make the right decisions because they have billions and quadrillions and trillions of millions of dollars. And you have like 1,000, 10,000, 100,000. If you don't follow them, you're going to get crushed. They are going to take your money. So,
And they're really good at taking all of your money. Yeah. And they own the world. When Pantera Capital, when you look at who owns Pantera Capital and who are the friends of the people who own Pantera Capital, they're right in the midst of all this stuff.
So I agree, but it's not so easy to follow the smart money, right? Because you play on different levels in a way. So if Pantera invested in a project, it doesn't mean you should invest in a project because if they invested in it, then they have to sell it at some point, right? So you might be just buying what they're selling.
You're the exit liquidity.
Exactly. Today, it's getting harder and harder for different reasons. Whales are becoming a lot harder to track because whales know that we are following them now with all the on-chain, free, transparent data. They know that we are following them. So whales are cutting their buys in hundreds of accounts now. So they are using a lot of techniques to be able to be very discreet on the market. Big capitals, they do a lot of investments like this. There's a lot of big capitals that have some pump and dumps schemes. They pump $100 million and they dump it. So you are the exit. There's a lot of things like this. So you need to be smart. You need to analyze and research deeply the projects you want to invest in. And most of the time, that's why people lose in the crypto market because they are just here not for the projects, not for the technology, not for the ideas, not for the team. They are just here for the money because they heard a friend that said, oh, this is going to make you a lot of money. And so that's where you lose a lot of money. So yes, it's not that easy. You cannot say, oh, there's Pantera Capital, I'm going to invest. No, you need to see the big picture and you need to analyze a lot of factors. But if you see that there are maybe 1, 2, 3, 4, 5 big capitals that are in one project, it's at least one part of the equation that is becoming positive.
It's an indicator.
It's like a good indicator to help you start to make your investment decision.
Yeah.
But you need to search other things also to be able to make the best decisions possible.
Just to add something quick for the people who follow Whales Wallet, so sometimes it's good to know what's inside and follow like the big whales. They have this and they invest in this. Yeah, they invest in some coins. But now there is one marketing strategy from blockchain's new projects is to drop freely tokens into big wallets to make them look that this big whale invested in my project. So sometimes there is blockchains that purely their strategy. They start thinking like this. They start doing this with NFT projects. and you get wrecked every time because you think this project is
That's
so
why
good.
I don't
But
do.
they're doing the same with tokens now. Like they
Yeah.
drop million token into like a big whale account,
Yeah,
making you think
yeah, like Shiba giving a bunch of tokens to what's his face,
they
Vitalik.
They
Yeah.
did it, and like even serious project, they use this marketing
Yes.
strategy.
So that's
now.
why
so
I don't-
Just be careful when following like big whale wallets.
I don't look at any of
Sometimes
that.
it's yeah, but
I don't
think,
like so I don't look at the wallets. I mostly don't look at the VCs. That's a very dynamic, fluid, tricky market to enter, right? What I do is I just go read what they release, and I say, and they tell you these are the projects, and I go, great, thank you so much, because when those guys are releasing that content about those projects, that means there's been tens, if not hundreds of millions of dollars of capital deployed in a way that creates the partnership so that they can actually brand it, right? That's the easiest way from, because I'm here to, because if we're revolutionizing money and gold and stocks and oil and technology and internet and websites and apps and metaverse and gaming and experience and what you see and what you smell and what you hear and what you experience, if we're revolutionizing all that, I just want to find one. I just got to find one oil that's going to last 100 years. I could just go buy one and I'd fucking crush it. I will just sit back and I'll have coconuts for my cash flow the whole time, and I will crush everybody's portfolio. Just give me long enough, okay? So let's, because one of the things people are missing is the regulatory compliance risk. People don't understand regulations. So they're buying shit that's not regulatorily compliant. Anybody who understands regulatory compliance could see Luna from miles and miles away. I can see Tron, I can see Tether. I can see 90% of this market going to zero because they're just not regulatorily compliant. Oh, you're gonna come create a privacy coin called Monero. Great, great. How are you gonna make it regulatorily compliant with the ISO 20022 banking system that's coming out? You can't. Guess what happens? You go and make a bunch of money in Monero, you bring it back to a bank, and the bank goes, where did you launder this money? And you go, oh, they say, show us the trail. And you go, I can't, it's a privacy coin. It's yeah, great, great thinking. So regulatory compliance is stuff that I've been thinking about since 5-6 years ago, because I knew it was coming. But within the next 2 years, regulatory compliance is gonna kill most of this space, because they don't understand the game. And a bunch of kids, bunch of dreamers are here thinking, oh, we're gonna build the free world that regulations can't control. Get the fuck out of here. Like, I'll let me know when your dream comes true, because that's not how the world works, especially not the world of money, okay? So regulatory compliance is one of the analytics mechanisms that we use to pick the right coins. Then I also look at exchanges. Which exchange has what, okay? Is this exchange regulatorily compliant? Is it owned by them? The ones that are owned by them are Coinbase. Coinbase is the most owned by them. Kraken, FTX. Those are the only 3 exchanges. And then, pro tip on exchanges, go to CoinGecko, look up the exchange score, and they'll tell you exactly what liquidity is being used to actually fund the system. And when you do that analysis, you realize all the other exchanges are gonna die. Most of the other exchanges are gonna die, because they're using Tether as the liquidity. Kraken, FTX, and Coinbase are the only ones using US dollars and euros as liquidity, real money as liquidity. So they're the only ones. And when you look under the hood, they're owned by the people who own the world. The guy's name is Sam Bankman. Bankman. Like, need I say more? It's all in the words. Yeah, Bankman. I'm sure he's connected to the banks. Okay? Kraken. You look at who owns Kraken? It's based out of San Francisco, and the backers and the people who own it are the who's who of the people who run the world. Coinbase is the new bank. When you look at who owns Coinbase, it just gets right down to the Rockefellers and Rothschilds and stuff, okay? So pick those coins on those exchanges. There's a reason why all the shitty coins are on KuCoin and Binance. Some Chinese exchange and some butt-fucking nowhere exchange is where all these coins that we're supposed to all get rich from are. What happens when that exchange goes away? Anybody hear about all the stuff happening with KuCoin and Crypto.com and all? I don't know if it's true or not, but I just look at the liquidity and I go, one day it's gonna die, because when Tether dies, it's gonna die. And when you look at Tether, you're like, who created Tether? Scammers. Where are they holding their money? Some weird banks. What's it backed by? We don't know. Apparently they have $80 billion of like legit debt. They have $80 billion of legit commercial paper. And when I call my fucking Wall Street buddies, I'm like, hey, did you see that much money move? They go, no, like $80 billion, $80,000 million of debt moving? Yeah, we would see $80,000 million of debt moving through the legit system. And not a penny has moved to these guys. Okay, so that means it's not coming from the legit debt system. It's coming from the shit debt system, which is probably China and whichever other countries. Great. Look what's happening to the debt in China. Is anybody paying it back? No, they're going bankrupt. Okay, so great. I don't want my money to be backed by debt from shitty countries. Great. So if your whole exchange is backed by debt from shitty countries, your whole exchange is backed by worthless shit. Therefore, all the shit on your exchange is worthless shit. Great. Fuck you. Seriously, like this pisses me off because it's like, hey, this is how money works, okay? If this is the first time you're seeing this is not how angry I usually am, but like, we had a party last night. I'm still a little hungover, okay? Okay. I'll just get right to it. I'll give you a list of coins. I'll give you the list of coins that I've spent 10 years researching with everything that I know, okay? Which camera's on? If you lose all of your money putting your money into these coins, that's your fault. This is not financial advice. You can destroy all of grandma's money by putting it into these solid coins if you play the game wrong, okay? So this is on you, not on me, but I'm going to give you a list, okay? Here are the ones owned by them, made for them by them. Bitcoin, made by the CIA or black industry or whatever you want to call it. People are like, who made Bitcoin? Dude, literally the SHA 256 code was made by the CIA. We all know that. The guy from Ripple, what's his name? I always forget his name. He's one of the God developers. He literally worked with Satoshi. We all know that. And he worked for the CIA before this. He helped the CIA develop this algorithm. So yeah, we know who made this. The people who own the entire world made a new asset class, okay? But anyways, owned by them, Bitcoin, Ethereum, USDC is the only stable coin to use right now. There's no other stable coins that are even close. XRP. XRP will be the bridge currency between the entire world. It will replace the dollar within 10 years. Within 15 years, it'll completely replace the dollar, but over the next 10 years, actually, by 2024, you will see a complete paradigm shift in the world where XRP will be set at the center of the yuan and the ruble and the dollar and allow them to communicate in the shit. And the patents are owned by the Rothschilds. Literally, their name is on the patent if you just go read the patent. And they have a patent for on-demand liquidity. Cardano, Solana, Polkadot, Avalanche, Chainlink, okay? Stellar, Algorand, VeChain, Filecoin, Quant, IOTA, Graph, the Graph, Synthetics. Those are all the ones that I've confirmed are made by the people who own the entire world. And there's a lot more of them, but those are the ones that I've done the research on. And there's more below on the list, but this is out of the top 100. Great. Most of these are shitty investments because the point is to make you believe it's a shitty investment. It's to make you believe, hey, this thing is the one to buy. Put some dog ears on the thing, and that's what we want you to buy. And we don't want you to go buy all of these. You know, Cardano did 100x before everybody even woke up to the bull run. And then when people came in and bought it, they're like, shitcoin, 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 shitcoin. Yeah, 100x shitcoin. Yeah. Oh, they're building very slowly. Yeah, that's how the world is built. XRP, shit stable coin basically. For 4 years, it's almost done nothing. IOTA, done nothing. Stellar, done nothing. That's the point. The point is to convince you that these are shitty investments. Chainlink, pumped before everybody. By the time everybody came in, dumped. Chainlink's going to $1,500 minimum. The real value of what Chainlink does in today's numbers are $1,500. And today it's at like 15 bucks or something. Okay. Okay. So now we have a list of coins. What does it do? Amazing shit. Where's the money coming from? Whales and the fact that they want to build a new world. Who's backing it? The people who own the entire world. We don't care about the VCs. The people who own the entire world have their names all over it. It's in all their documents. Cello is another one that like it's in all their documents. They're listed. They're telling you they're going to run the world with it. Okay. Now, obviously, these are all in different risk ranges because when you look at the market caps, you can see, okay, there's 300 billion, 50 billion, 10 billion, 5 billion, 1 billion, 500 million. Okay, so the 500 million one is going to pump more. You put in $10 billion into that, that's going to do a 20x. So, okay, so that's your high risk. So a simple way that I calculate it with my own risk strategies is top 30, low risk, 30 to 80, medium risk, 80, and this is top list coins, 80 to about 150 high risk coins. Anything below that, stupid, ridiculous amounts of risk. You should only put a little tiny bit in there because if it's truly going to do what you say it's going to do, it's going to go from $2 million to $1 billion. Putting 2% in there is more than enough for me to make ridiculous amounts of money. Okay. All right. We have the coins. We have the stuff. We have how to pick it. All right. How do I enter? This whole talk was supposed to be about how we enter, right? How do I literally enter? And a common misconception everybody has is dollar cost average. Always dollar cost average. What is the thesis of dollar cost averaging? Why do you dollar cost average? Can anybody explain to me why you dollar cost average?
Because you believe it's going to go down.
Shh, quit fucking giving away the secrets. You're from the team.
Sorry.
You dollar cost average because you want to plane out your entry points.
Yes.
But most of the time is because you're not sure about the coin. So usually it's going to go down. So you're not sure when you want to enter the market.
Yep.
So you dollar cost average during the whole dip or during the whole time. So you try to plane out and to have the best entry price. But in my opinion, this is like a lazy people way to invest. Because it's when you don't want to you don't really want to do the research. You're not really into it, but you still want to invest. So you dollar cost average. So you don't have the best entry point, but you still have an average entry point.
It's great, right? So yeah, like exactly that. If there's somebody who's not sure, that's how you would enter. And dollar cost averaging is the idea that you buy little bits along the way. If I have 100% to deploy, I'd buy maybe 5% every week or something, right? But what you said, the real reason why you dollar cost average is because you think it's going to go lower. Because why would you buy something today if you think it's going to go higher? Why would you buy it later on? If you're convinced that it's going to go higher, then you would buy it all today at the lowest price, right? You dollar cost average because you are thinking it might go lower, which means I'll buy some now, it'll go lower, I'll buy some more, it'll go lower, I'll buy some more, it'll go lower, I'll buy some more, and then it'll start to come up and I'll buy some more and buy some more and buy some more, and then you end up calling the bull. It's a great way of entering. For most people, because they don't have the kind of knowledge, that is the way to enter, dollar cost average. But when you dollar cost average, make sure you have your metrics in place so that you know what your entry prices are, what your break-even prices are. If you made 20 purchases, 5% each, then you need to know for each coin what's my break-even price, because that becomes your average entry price. Another way, one of my favorite ways to enter is to just wait. Just wait. Let it all happen. Let the dump happen, let the bull form. Let all the data start to flow in and line up in a way that tells me, okay, the bull has formed. And I don't care about buying it here. I'll just make one big entry here. Because we're managing a lot of people's money. So for us to have 20 entries for 50 people, 20 entries per coin for 50 people, and they have 10 coins each, now you're talking about ridiculous numbers. The management gets ridiculous, right? So another dumb thing people do is very dumb, is to set automated orders above a line that a toddler drew. It's like, hey, this is resistance. Once the resistance turns to support, I'm going to buy right above the resistance. Why do you think the prices keep doing this. And then they leave and they go, look, I broke through the resistance. And everybody buys there and then it dumps on them. What's going on right now? Oh, the ship's leaving, the train's leaving. Buy here, all the automated orders get filled. Smart money takes that money, runs away with it, right? If that's your jam, that's your jam. But like automated orders, you're playing against AIs who understand you better than you. It's probably not going to work out well. Some people do regular monthly purchases. That's nice, because then it's like, I got money coming in, I'll just buy it. Money coming in, I'll just buy it. When we're down in that bottom range, just buy it every month. Who cares? Who cares if you got Bitcoin at 3,000 or 4,000 or 5,000 or 7,000 or 10,000? Who cares? You're going to 70. Then you're coming back down to 15. Then you're going to 150. Then you're going to come down, and then one day it's going to be 500,000, right? So buying it regularly like that is something that works for a lot of people. Another mistake that I see a lot of crypto heads make is they want to stay off of the radar. They're like, I'm going to enter, I'm going to buy, but I'm not going to buy it from a KYC exchange. I'm going to take my money and go to some shady guy and OTC buy it from him because I think I'm so smart, right? And it's like, first of all, the moment you turn, because your plan is to turn that money into a lot of money, once you turn it into a lot of money and you bring it back to a bank because you want to buy some coconuts, they're going to be like, where'd you get this money? And you're going to go, shady guy? They're like, oh, shady guy business. We know exactly how that business works. Your money's blocked. You're not allowed to participate in the banking system because you can't prove to us where you made the money. That's one point. Secondly, there are wallets that get blacklisted with coins in them because they're doing illicit activity. And the best way that they offload those blacklisted coins is to give it to idiots who think that they're holding gold, but they're actually holding blacklisted coins. And then when you take it back, you go, no, look, this is what I did. This exchange, I sold these coins. And they'll be like, first of all, the exchanges won't even let you sell it because their algorithms know that it's connected to blacklisted wallets. Even if you do it, you just got some blood money, or you got some war money or gun money. You know how much illicit business is being done in Bitcoin? It's more than you think. So you don't want to be one of the person holding it. Go to a legit exchange. Like, if you're trying to tell the universe, I want to get rich, start acting rich. Start behaving like the rich do. Have structures in place. Have companies in place. Have treasury strategies in place. So you actually participate in a way so when they go, where did you make this money? You go, here. Here's all the accounting. Here's all the stuff. Every penny is accounted for. All the taxes paid for. In Indonesia, we pay 0.6% tax, 0.71% tax on crypto. Great. I paid my insignificant amount of tax. Get out of my way. Daddy wants to buy some coconuts. Okay? It's all about the coconuts. Who cares about the crypto, right?
And dancing.
And dancing and partying. Dancing with coconuts, though. Coconut parties, you know? Okay. So you picked your way of entering, whichever way you like. You tracked it right. Do you understand the tax implications of what you're doing? Do you understand how to optimize your tax? Do you even understand what your tax residency is? Which jurisdiction applies to you tax-wise? If you don't, get updated quick. Because wealthy people do not put money into places without understanding their tax residency. And your tax residency is going to determine what actions you take and how you take them. Right? Like, for example, if you're an American citizen, it doesn't matter where you live. When you buy crypto, if you sell it before a year, 30% tax. If you sell it after a year, 15% tax. You could have saved 15%. It might have dropped 10%, and you would have sold it for 10% lower, but you would have saved 15% tax. That means you would have made 5%. And you thought you sold the top, but you paid the man more, right? Or here's a good technique. If you're in a jurisdiction, especially if you're watching, if you're in a jurisdiction which has this kind of like tax bullshit, a lot of tax bullshit, then when you're down, what you do is you sell the crypto and you rebuy it. Bitcoin, bought it at 70,000. I bought $100,000 of Bitcoin, now it's at 20,000. I'm down 80,000. I sell it, I rebuy it, I mark it down on the books saying I'm negative 80,000. I get to deduct 80,000 from my taxes. So at the end of the year when now I make another 80,000, I take the 80,000 I lost, the 80,000 I made, and I tie them together and I go, I owe zero taxes. It's called tax loss harvesting, okay? But understand the tax implications of your choices. Because if you don't, there's a banking system coming that's not gonna ask. November of this year, a banking system is going live called the ISO 20022 banking system. That's been in production since 2014. That's going to revolutionize how banking is done. Between 2022 and 2025, it's going to be completely implemented globally. By 2024, something's going to happen that's going to force you to hit I agree on this new system, and this new system is not going to ask. It's going to take. The moment you do something, the tax will be taken automatically. And if you didn't figure out your tax residency stuff and you think you're about to get rich, get ready for your countries to take 50%. And if you're a citizen of a country and you think, I'm not an American, like they're not going to take stuff because I'm living in Indonesia, get ready for a rude wake-up call. These countries are going broke. They're going to look for you to get cash from you from different places. Okay. Great. So I know how to pick the coins. I know who's backing them. I get all the right places. I go and do analysis to find out which sectors to enter, which coins to enter. I pick my strategy. I enter. The profit-taking part we're going to do next time. This is a series, so next time we'll go through the details of how to take profits, or a few ways to take profits. I'm not here to tell you what to do. Pro tip, run a automated tax software called TaxBit on your portfolio. Go to TaxBit, sign up for the $65 subscription, run it on your portfolio. It'll tell you a bunch of this stuff. You run it regularly and it'll tell you tax optimization things that you can do depending on your residency. And at the end, it'll literally print you out a full report of your entire portfolio and your earnings and stuff in a way that you can hand to your accountant or whoever does your taxes, and they will be able to file the taxes well for you. And if all of this is like, Sim, we came to crypto because we don't want to pay taxes. No, you came to crypto because you don't want to get rich. Rich people pay taxes. They just figure out ways to pay nothing. Always pay your taxes, just figure out a way to pay less. 0.71%. Great. I'm happy to give 0.71% of everything that I earn to Indonesia. She's giving us so much. That I can agree with. 40, 50%, fuck off. Okay? All right. Now, a few other kind of auxiliary things when you're entering the markets is the way you put in $1 million into a market is different from how you put in $1,000 into the market. Anything less than $100,000 you put in differently than you do with millions of dollars. And you're going to have this problem pretty soon. So listen up. The wealthy do not buy on crypto markets. The wealthy do not purchase crypto on the markets at all. That's why the game we're playing is poor people's game, right? They do something called OTC trading. Wait, but Sim, you just said, don't do OTC trading with shady people. Yes, shady people. They don't deal with shady people. These exchanges we're talking about, the big exchanges, they all have OTC desks. And an OTC desk is really rich person who wants to buy and really rich person who wants to sell. And they don't even want to go to the markets because they know if they sell $50 million of a coin, it's going to move the price like that. So they just you go to the OTC desk and you say, first of all, you want to bring in $1 million? Let's say you want to bring in $100,000. And you say, hey, Kraken is the best OTC desk in the world. You sign up for the pro service, they'll verify your wealth, then you get OTC access, then you get access to a bunch of liaisons who actually you get to speak to, and then you go, hey, I want to move $100,000. They go, great, from which bank account, from this place, okay, hit I accept, here's the details, send us $100,000. You send them $100,000, zero fees, OTC desks don't have fees, plebs pay fees. For zero fees, they'll try, the fee of $35 to try to move your money or whatever, but it's going to be more than $35 for that much money. But like the money will come in, and they'll just instantly buy whatever you want for you and put it into your wallet, put it into your account, without ever touching a market, without ever moving the price, without ever charging you a fee. That's how wealthy people buy stuff. So what we also do is we watch the OTC desks. That's one of the ways that I can tell really if the wealthy are in the background doing some shit that we're not seeing. You can watch if OTC desks have inflows or outflows or what the balance is between the two. But if you're moving a lot of money, you move it through OTC desks. Because when you take that 100,000 and you turn it into 10 million and you want the 10 million back, that's when the OTC desk is going to be your friend. Because you're going to go to the OTC desk and say, hey, send me back 9 million. I want to play with 1 million, send me back 9 million. They will be like, great, give us your bank account. Here's the bank account. Boom, $9 million is sent to you. From a bank account that sends hundreds of millions of dollars a day, billions of dollars a day. So when your bank receives $9 million from this bank account that's moving ridiculous amounts of money, they don't ask questions. They will go, okay, Kraken's OTC desk is sending it. It must be legit. And then if they ask you questions, you can then direct them back to the desk and say, hey, explain to them where I made the money, okay? Yep. And the other thing that we're experiencing now is people are very scared of exchanges. People are terrified of exchange, which you should be. Most exchanges in the world are going to take all your money and run away with it. If they're regulated exchanges and they have dollar-based liquidity backing them or euro-based liquidity backing them, and they're owned by the people who run the world, and all of the people who run the world's money is sitting there, then I trust exchanges. For me, Kraken is the best, bar none. The experience of dealing with Kraken is just on another planet when it comes to exchanges. There's humans, there's people, their apps are simple, the liquidity is abundant, they're rich as fuck, they're a private company that crushes it. Coinbase is a necessary evil, it's the devil's tail. It's literally just another bank that they've just now turned into a crypto bank, so they're shitty to deal with. But if you're a New York resident or Washington resident or certain residents from certain jurisdictions, you have to use Coinbase as the place to get it. But if you're concerned about all this stuff, then take your money off of the exchange and put it into a wallet. But if you're a beginner, is this thing on? If you're a beginner, please don't mess with wallets. Okay, learn how to use a wallet. I've seen more beginners make all of their money disappear from wallets than I've ever seen from exchanges, ever, yet. So, okay, Celsius really hit the nail on the head. But I'm just saying, if you're a beginner, you're the biggest risk to your own portfolio. So if you don't know how to use a wallet and you move $1 million onto a wallet and then you forget the passphrase or some shit, like you're gonna lose all of your money. I've literally seen people send it to the wrong address, which didn't exist, or send it to the wrong network. Okay, so storing it on wallets, CryptoHead will always tell you, not your keys, not your money. No, like not your keys means you're not the biggest problem. To get your money out, it's gonna take 4-factor authentication through humans and exchanges that won't let you do wrong things, then you move your money out. So yes, if you're somebody who knows how to use wallets, move the money out, keep it with yourself. If you're somebody who doesn't know how to use wallets, get familiar with wallets quick, because by the end of this year, there's gonna come a time where everybody will need to get off of all exchanges. Right now, we're not at that stage yet. Right now, it's just panic. People are telling you Coinbase is gonna go bankrupt. They don't know what they're talking about. It's just FUD. Fear, uncertainty, and doubt. Okay, so we have 10 minutes. Any questions?
Yeah, it's really true. Like the crypto market is very complex. This is a very complex space still, and it's getting easier and easier. But there's just one thing I wanted to say to the people. Or you consider yourself like a professional and you act like a professional and you buy and you trade and you invest yourself because you are putting in the time, the effort and the work in what you do. Because trading and investing is not a game. It is not a game. You will be burnt. Trading and investing is very hard. So or you put in the time, you put in the work, you put in the knowledge, you put in the hours to do this and really consider it as a second work or as a primary work and as a primary or secondary source of income, or you find a professional that will do it for you, like Sim, for example. So, or you do it professionally, or you find a professional. But this is not a game. Don't play it like a game because you will lose all your money. This is not like just oh, there's this Bitcoin thing, I'm gonna buy some Bitcoin.
This is not child's play.
Nobody made money like this. Or you're very, very lucky and you can make some money in the short term, but nobody makes money long term if you don't consider crypto and all the markets seriously and like a professional.
So that's why what we do is we literally sit down with individuals and we help them develop their strategy. A 70-page document, 71-page document that lays out step by step who they are. And this series that I'm doing at Park especially is the free version of this entire strategy. I'm giving this to people. I'll give you a document. You can fill out the document, you can watch this, you can go to our website, watch all the courses. There's free, all this stuff is available for free. Then if you want my time and sit down with me, pay me for that. And we'll sit down, we'll go through your entire life, through your entire wealth plan, visually draw it out in a way that makes sense. How do we spread things out with 7, 8, 10 different revenue streams attached to it with cash flow coming in? Connect the cash flow to your wallet, and the wallet connects to your crypto, and you make money in the crypto, and you take the money and you put it into the revenue streams, and your revenue streams make you more money, and that flux happens, or that flux, I guess, happens on a yearly basis. So it's like, you know, there are times when you want to be in crypto heavy, and then there's times when you want to be in revenue streams heavy, but it all comes out of a description of who you are as a person within, and how you like to live life, and how your brain and your psychology works. So yes, if you don't know what's going on, sit down with somebody who knows, who can go through your entire life and direct you in the right directions, and make sure everything's laid out in a way, and you're executing in a way that you have a plan. And then, like, very, very few people, like less than 1% of the people that I work with, are the right psychological fit to work with us. Because we will not manage your money if you're somebody who's anxious. Sorry, you manage your own money. Because I know what's going to happen when the market drops. You're going to give me 1,000 calls, and I do not want to skip my coconuts for your calls. If you need to understand the psychology from the beginning, is you need to follow these rules yourself, and if you're the right fit, yes, do it. But yes, get the right expertise, get the right support, right? But the other side of that is also, once you've gone through that, you know who you are. You know how to participate in this space to the best of your abilities. You're going to fuck up about 20 to 30% of that, but you're going to make about 70%. Great. But then I know who you are. Then I know when we bring you a revenue stream, it's a good fit for you because your life is defined. You've laid out your goals, your life, your lifestyle. You laid it out in a way that allows us to be able to make sure we bring you into things that are safe for you, that are on the timelines that you're investing. Speaking of timelines, you need to have a timeline. What's your investing time horizon? If it's anything shorter than 3 years, you're playing the wrong game. 3 years? 3 years to 10x your money. You can't wait 3 years to 10x your money and then do it again next time, right? So please think about it on these scales, because that insulates you against all the bullshit. In the worst case scenario, you just hold. In the best case scenario, you actually execute and take profits. So next time, this is now going to happen at Park, because this is a series that we're producing there. Please watch. We now have introduction, entering the markets, staying in the markets, exiting the markets, and all the stuff that comes alongside that, analytics and security and all this kind of stuff. Talks here is just going to be more about the different dynamics that are playing out. So in closing, I just want to say, you have been given the magical opportunity of buying the base layer of the future 250 years. You're buying the base layer that they're going to build the next 250 years worth of the world in. That's what you're buying. What does it do? It takes over the world. Where's the money coming from? The entire world will want to use it. That's where the money's coming from. So if you understand that part and you're okay to wait 3 years, you will win this game massively. But if you do not have a written out plan, there's somebody else with a written out plan who's going to take all of your money. Okay? So thank you guys for being here. Appreciate you all. Yeah. See you guys next time.
Thank you, Steve.
Thank you.